Good morning. I hope you're well. Welcome to this week's weekly roundup. So, couple of updates and hopefully some useful bits of information, some hints and tips about what's happening, and just a general update really. So, first of all, financial support for businesses during coronavirus. The government have got one single page that lists out all the financial support that's available to businesses. So that's really useful. It's one page and it's links to all the various different sources of information that might be of value to you. So there's a link to the job retention scheme, so how the furlough scheme works, how statutory sick pay, what you can claim if you've got people off sick due to coronavirus, VAT, deferred payments. So I've talked a lot about that in these check-ins over the last few weeks. So that deferred VAT from last year needs to be paid. There's a scheme you can join to pay that in instalments. The link's there. Paying your personal tax bill. If you're struggling to pay that, the link's there to give you the guidance on what to do about that. Check if your business is eligible for business rates relief, so for retail, hospitality in particular. More information is on there on the self-employment income support scheme grants. So the fourth grant is going to be covering February to April, available from late April until the 31st of May. So you can't apply for that yet, but the details are on there. No, actually, it just says late April in terms of when it's opening, which is not particularly helpful. Obviously, we'll be keeping an eye on that and letting you know when that's open and you're able to claim for it. There's going to be a fifth and final grant covering the period from May to September that you'll be able to claim from late July. That one's going to be different than what you've claimed before. That one's linked to reduced turnover, not linked to your pre-COVID profits. So watch out for that. Grants, so coronavirus restart grant, that's the new grant that was announced in the budget in March. Details of that are on this single page. There's also the national lockdown grant and additional restrictions grants. And there's some local grants as well, which we had an email this week from Chichester Council. So I'm going to talk about that specifically in a minute. And finally, the recovery loan scheme. So the recovery loan scheme was launched this week, Wednesday, I think, and will ensure businesses continue to benefit from government guaranteed finance throughout this year. So it's open right the way up to December. And the loan will include an 80% government guarantee and an interest rate cap. So the previous bounce back loans and coronavirus interruption loan scheme from last year, they've stopped now. Those schemes closed on the 31st of March, and there's now this recovery loan instead. Loans vary from size from 25,000 up to 10 million, and there is invoice and asset finance available from £1,000. So there's a link which will be in the email after this to specifically link to that, but also that general page covering all the different things that is available in terms of government support. This recovery loan scheme brings to mind again cash flow, the importance of cash flow for business. Any clients that I speak to that are applying for loans, remind them constantly you need to think about how you're going to spend that money, what's it going to be used for, obviously, but then also when will the repayment start, and when things return to normal, in inverted commas, what's that repayment, what's that going to look like, and will the business be able to support that payment? So just some hints and tips on your cash flow, the things to be thinking about. Have a look at your budgets, set realistic and achievable targets for the rest of this year. It's quite challenging. That obviously we've had a full year now of restrictions. We're hoping, obviously, we all are, aren't we, by middle of June, those restrictions are practically gone, but who knows? So that is quite hard to set those budgets. So maybe think about, if you have another year like the last 12 months, what does that look like? If things improve marginally, what does that look like? And you can then do some sensitivity analysis on that. Get your employees involved in any discussion of the likely trading conditions, get their input on reducing costs and maintaining revenues. Review and flow chart the main processes in your business. So how do you deal with orders? How does just how the whole everything flows through from start to finish, the processes that it goes through. Challenge each of those steps. Do you need to create that spreadsheet, print it out and put it in the folder on the shelf, because then nobody looks at it, do they? So, you know, are you doing things that aren't necessary, or even worse, well, certainly not adding value to the business, and even worse, simply irrelevant, not necessary? So review those processes. Put extra effort into making sure that your relationships with your customers are solid. I think one of the massively important things that have come out in the last 12 months is that loyalty. You know, we've been incredibly fortunate, and lots of our clients have been incredibly fortunate, that they've got strong relationships with the people that they deal with, and that feeling of we're all in it together, we support one another. So make sure that you've got strong relationships with your clients and your customers. Review your list of products and services. Are you doing things that are they profitable? Do we need to be doing those products and services? And maybe if they're not a core profitable product, look to cut them out. Review the efficiency of the business processes and consider alternatives, such as maybe changing suppliers, maybe software. We've been looking at software for payment when clients pay us. Is there software that we can make that easier for our clients and improve our cash flow, obviously? On the other side, the money that you're paying out, look at what your payment terms are with your suppliers, and have a strong relationship with them as well, and agree the payment terms up front in advance, and then you can map out what that cash flow is going to look like over the next few months. Put it all together, put it a business strategy, and get the buy-in from all the key people in the business, and refer back to it. Remind yourself of all the things that you were going to do. I think the biggest failing when people do a business strategy document is they say, look at that beautiful business strategy, and it gets filed away or printed and put on the shelf, and then 6-12 months later, oh, what's that? And dust it down. Oh, we said we were going to do this, didn't we? Oh, we never got around to that. So yeah, plan your activities and have a robust way of monitoring it. And if it's not working, change it, obviously. Come and talk to us about your cash flow planning. If you're on Xero or similar, there are add-on apps that can connect to that and can very easily give you a cash flow. Might need a little bit of tweaking, but it's a good solid start. We did one for a client week before last, and it cut the time right down in terms of putting that together, because we had 80% of it sorted. We had to tweak it for things that were going to be different this year, but fundamentally, we were 80% there. So it was a very relatively straightforward job compared to what it has been in the past without that software. Okay, so government support news in relation to coronavirus. So very briefly, no massive changes really than what we've been discussing since Christmas, I guess. The coronavirus job retention scheme, as we know, extended to the end of September. Furlough claims need to be made by the 14th of the following month. So you've got till the 14th of April to make your claim for March. The scheme is extended to September, but the percentage of the payroll that's covered by the government reduces at the tail end of those months. Again, lots of details online on that. And again, cash flow, think about the impact on that, because at the moment, probably all of the wages are paid for by the government, apart from the pensions, national insurance. As we get into the summer, that's going to reduce. So there will be a cost that you as the employer will need to fund. So what does that look like for cash flow? What does that mean in terms of what your income needs to be? NHS test and trace in the workplace. So employers must take steps to keep workers and visitors safe. That's always been the case. That's no different in COVID, but obviously there are particular guidelines that we need to follow in these particular times. And there's lots lots of guidance on the website there, and it's all about people continuing to work from home where possible. Essential to limit the mixing between households. People, if they do test positive, what you as an employer, your responsibilities are in terms of the people that they may have come in contact with if they've been coming into the office. So again, some guidance, you can find all of that on the website. And if you've got visitors, customers coming into your business, then designated venues in certain sectors must have a system in place to request and record the contact details of those customers, visitors and staff, so that obviously if the transmission rates do start to go up when restrictions start to be lifted, there is some provisions in place to monitor and test and trace that. Okay, grant funding then. So there's a fresh wave of grants launched as councils are called on to do their bit to continue to support businesses. So in particular, a new grant scheme was launched last week, which I've already mentioned. The Restart grant supports businesses in non-essential retail, hospitality, leisure, personal care, accommodation sectors, with a one-off grant to reopen safely when restrictions are lifted, which is next week. Obviously, a lot of these are opening next week. And then there are also grants for non-essential retail, also opening soon, one-off cash grants up to 6,000 from the local council. So follow the link in the email for details on that. We have also this week received an email from Chichester District Council specifically about a grant scheme that they've launched. It's called the Enabling Grant Scheme, and that's launched and will be open for applications on Monday, the 12th of April. So Monday of next week, there's a grant that local businesses specifically can apply for. There are some quite detailed guidance notes on there, and in the email, they were quite stern. They said, please make sure that you read the guidance notes carefully before applying, as the criteria has changed from what was previous grant criteria, and the application process is different from previous years. So read those notes, make sure you are eligible before you apply, and the application process needs to be followed, obviously. They tend to be quite challenging, I think. Lots of clients I've spoken to have said it was quite difficult to fill in the forms and all of that. So do this as soon as possible. There is a certain amount of funding, so they're not specific in terms of how much funding is available, but a certain amount of funding which will be available to businesses in 2 rounds. The first round of funding will be open for applications from the 12th of April, as I've said, and will close at midnight on the 2nd of May. So we've got most of April, 2 days in May, so less than a month to make that application. So it's quite a small window, so it's worth looking at as soon as possible. So businesses can apply for one of the following 3 grants. So capital projects, up to a maximum contribution of £2,000 from the council, which is a 50% match funding. So if you're looking to invest in capital equipment, I guess, things, I've not checked the details, but I assume that's capital equipment or general capital projects, then you can get 50% up to £2,000 funded by the council. Website, social media projects, a maximum contribution of £500 from the council, which is non-matched funded. So I guess that's be something that they'll just give the £500 to help you get your website, social media activities off the ground, I guess. And startup awards, up to a maximum contribution of £500 from the council, non-match funded. So again, that looks to me that that's aimed at small businesses starting out and can get that bit of funding to help them on the way. Which, you know, if you are a small business and you're trying to get established, every little helps. So look at that and apply for that and get in quickly, I would say. They are particularly interested, in receiving applications which demonstrate one or more of the following criteria. So contribution to the local economy, so they're after local businesses, so a local supply chain, the use of local suppliers, protecting local jobs or creating local jobs. They're interested in hearing from applications that demonstrate reducing environmental impact, so protecting the environment, reducing carbon footprint, for example. Innovation, improving productivity, new ways of working, or offering your goods or services to the customer. We love that. Software's great. You know, the more you can innovate, the better, and you can get some funding if you've got some ideas around that. And there might be some R&D tax credits available on that, but that's a totally different subject for another day. I'm not going to go anywhere near that today. We'll do a video on that, I think, at some point in the year. And then commercial viability. So will the proposed expenditure help to sustain the longer term prospects for the business? So those are the things that you need to be thinking about, and will give you a good chance of getting that funding. So all valid applications will be evaluated and assessed by the economic development officers, and the decision process may take up to 6 weeks. So if you don't hear straight away, it might take 6 weeks, and if they get a lot of applications, then potentially, I guess, it will take 6 weeks, possibly more. And then there'll be a second round of funding available in the autumn. More details on that in due course. And the final comment I would make on grants, I've said it lots of times on this check-in, if you do get turned down for the grant and you're comfortable that you meet the criteria, then you should, and I recommend that you appeal. Mentioned before, a client that applied for a grant was turned down and then was awarded $7,500 on appeal. So definitely worth doing that. Okay, now then, to finish off, last 2 or 3 minutes, something completely different. Well, not completely different, it's still tax, but not COVID related, put it that way. Very briefly, I'm going to talk about making tax digital. This is going to be the subject of quite a lot of our mail outs, I think, over the next few months, and there'll be some videos and blogs and things. It's quite wide ranging. So I'm just going to briefly touch on something that's changing right now that's going to affect a lot of people. So making tax digital was introduced in April 2019 for VAT registered businesses with a turnover above the VAT threshold. So if you were VAT registered and your turnover was more than 85,000, then you had to comply with making tax digital from 2019. And the basic requirement was that you were required to keep digital records and submit your VAT return via software that can directly link to HMRC. So for a number of clients, a number of businesses, they were preparing their VAT return, Excel spreadsheet, manually, maybe using software, but then they would logging into their HMRC account, putting the figures into the VAT form and submitting it. So that had to stop. You're no longer able to do that unless you load the VAT threshold. You had to use software and be able to export essentially your VAT out of your software into HMRC. And the next phase was due to start last year, but due to the pandemic, this was pushed back, and the next phase started on the 1st of April this year. So, and that is still linked to those businesses at or above the VAT threshold. So if you're a small business below 85,000, VAT registered because you chose to be VAT registered, this isn't something you need to worry about in the short term. But if you're above that threshold, then you are required to have digital links in all your record keeping. So this means that you can no longer be copying, pasting data from one application into another. It all needs to be linked digitally. Now, what is a digital link? So HMRC have defined a digital link as, and this rolls off the tongue, a digital link is defined as the data transfer or exchange within and between software programs, applications or products that make up functional compatible software And these must be digital, where the information continues to form part of the digital records. Okay? Yes, rolls off the tongue, clear as mud. There's lots more detailed guidance online about that. To try, it's not as daunting as it sounds, because there's loads of software out there that will do all of this for you. So HMRC state that every piece of software must be digitally linked to the other pieces of software used in the record keeping to create a digital journey. I think the thing we see the most is sales. There's a system for sales, and then there's the accounting system. So the sales system is whatever it might be, but we do the accounts and the VAT return using Xero or QuickBooks or whatever. So it's making those two, essentially it's making those systems link up. So they want those to link up to create this digital journey. So there needs to be a clear audit trail from the data recorded in the accounting system all the way through to the submission of the VAT return. Now, if you're raising your invoices in Xero and you're obviously keeping all of your records in Xero, or any other bookkeeping system, doesn't need to be Xero, but if you're doing that and then you're submitting your VAT return from that system, you've probably got it covered. But it does need to be thought about, because there might be things that are done outside of the system that actually we need to find a way of bringing them in. So the simplest way of meeting these requirements will be to hold all your records in a single software package, which enables the submission of the VAT returns direct to HMRC, such as Xero. All sales and purchase transactions recorded in the software, and as long as the information input has the correct VAT codes, the system will be able to compute the VAT return with no or little manual adjustment. So for all of our clients where we're involved in the VAT return, that I'm comfortable that that's happening. The only thing we need to be talking particularly to clients about is when if they've got external systems for sales in particular, and maybe other things. So yeah, because some businesses may have more than one piece of software they use for record keeping, or you could be part of a VAT group, so it starts to get complicated if you're a VAT group, so you've got more than one company but one VAT return. Probably not something that affects many people that are on this webinar today. But if you can export that information from one piece of software and then import it into the other to produce that record, that's going to be acceptable. If you can't do this, then you may possibly need to consolidate the information into a spreadsheet using links to separate spreadsheets and then submit the VAT return via an API, which is an application programming software, often known as bridging software. So it connects the various softwares together. And you can still use spreadsheets. This isn't the end of spreadsheets. You can still use them, but you probably need to reformat them and make sure that they will comply with these detailed rules that HMRC have issued. I do think, though, that there is an opportunity here. I think that if you embrace the software, really understand the financial processes that your business goes through, and can get the best out of the software, then what you're going to get is a good, reliable profit and loss account statement on a real-time basis, a balance sheet on a real-time basis. And then you can connect to these fluidly cash flow type apps and do that cash flow projection. So whilst this is daunting for many people and feel that perhaps they're doing this just for the benefit of HMRC, I do think that there's an opportunity to embrace it and give you and your business some really good, strong financial information so that you can make better decisions, generate more cash, and just be more successful. So anyway, I'm not going to go into any more detail on that. There are various other things to know, but I'm conscious of the time. I'm trying to keep this to 20 minutes and failing. So I'm going to leave that there. There is going to be a blog on the website. There is going to be lots of other support that we'll be publishing, going into much more detail. But I just want to flag up one final thing. So my finishing statement today is what's next for MTD. So we've got from the 1st of April this year these digital links that everybody that's above the VAT threshold are going to need to make sure they comply with. From the 1st of April 2022, all VAT registered businesses with a taxable turnover below the VAT registration threshold will need to follow the rules. So at the moment, it's those people with 85,000 plus turnover. From next year, it's everyone. So if you're a small business and you've got your VAT registered because you choose to be, because it makes sense for your business to be VAT registered, you're going to have to comply with MTD from next year. From April 2023, so 2 years' time, self-employed businesses and landlords with annual business or property income. This is income, this isn't profit, this is income. So what you take from either rentals or business income above 10,000, which is hardly anything really, will need to follow MTD rules and all these digital links and all of that. We've got quite a lot of small sole trader partnership type clients that we need to be talking to them to get them aware of those rules. So if that's you, you'll be hearing from us this year to get you lined up to get all of that complied with. From April 2024, companies will start to be using MTD for corporation tax under a pilot scheme, with all companies expected to join Making Tax Digital for corporation tax from April 2026. So yeah, it's going to affect everything and on all of the taxes essentially. It was introduced 2 or 3 years ago. It was delayed a little bit, but now they're pushing forward. And whilst it may seem daunting at first, like I've said, there's lots of software available that can make it relatively painless. And embrace that software. You'll probably find it'll save you time, it'll save you costs, and it'll mean that you've got much more, you're on top of everything, which means you can plan for your tax liabilities and all of those sorts of things. So yes, it's a bit of a nuisance, but I think it's something that you can benefit from. So that's it for today. Thank you again for joining me. I'm taking a week off from today. I'm taking all of next week off, totally unplugging, turning everything off. So there won't be a check-in from me next week. So, but I will be back in 2 weeks' time. So I'll see you then. Thank you. Bye.